Very simple and powerful method to mark liquidity zones in the stock market. We'll just use one time frame and we will mark days highs and days lows for the last 5 days. And I'll show you one of the cleanest way to understand where big players like institution, FIs, DIs are placing their orders, and you'll easily track the market liquidity zones. So let's get started, and I will show you in my chart, trading view chart. So I hope everyone has the trading view chart. So we'll open the trading view chart and I'll show you how to mark the liquidity zones there. So let's go there and we will see. Okay, we'll see the liquidity zones, how they are marked. So here we are in the trading view chart, and you can do in any chart like bank nifty, nifty, any stock, but today I'll show you on the nifty chart. For the let's mark the liquidity zones for the last 5 days. So today the video that I'm recording is on the date of 16th of November. So last 5 working days, let's say we'll start from 10th of November. Let's go to 10th of November. So 10th of November is starting on here, on this part. Okay, here is the 9:15 window. So before that, let's mark a 15-minute of time frame. Why 15 minute? Because 15 minute is neither too fast like 1 minute or 5 minute, and it is neither too slow like 1 hour, 2 hour time frame. So 15 minutes is the best time frame to mark the liquidity zones for the day's highs and day lows. So let's open the last 5 working days. So it will be around 10th of November. So let's go to the 10th of November till 10th of November in the nifty chart. Okay, so this is the 10th of November. So we'll draw a vertical line here so that we'll mark from where we are marking the liquidity zone. So go to this, select a vertical line and mark here from the 10th of November where it starts. So from here we will be marking all the highs and lows of days highs and day lows, which will give us the liquidity zones. So let's take for the previous day high. So how to mark the liquidity zones? You have to do a rectangle box. So go here in the geometric shapes of the trading view. So those who are new, I think it will be a learning for you guys where we will get the shapes. So lines will get here, vertical lines, and for shapes you can come to geometrical shapes and then go here and select the rectangle part. Select the rectangle and we'll go to the 14th of November, the day high. So just click here, as it is the day high, just mark a rectangle on the day highs. So we got the day high here. Now we'll go to the day low. So if you can see the chart, the day low is somewhere here. We don't have to mark the exact day lows, but an average will do. So select the next rectangle and we will mark it here. So we got the days high and low of the previous day. Now we'll go to the next previous day. So if you're using the trading view for the first time and you don't know how to mark this, so you will get this. So if you get a default one, just remove it, and if you don't want the rectangle, just select the cross mark and you will not get the rectangle part. So once again, if you want to mark the previous day rectangle, so click on that, and then so this is the previous day's high. So let's make a high until the end of the same where we are doing it for the next day. So we get this day's high, and then we have to go to the day low, which will be, see, if you see 2 weeks like that, let me expand you more to make you understand. So if you get 2 weeks this and this, we can take an average of that, and and let's go to the rectangle and then mark. So this we have to again drag it till the next to get an average of it. So this we got the days low, now we want to go to the days high. So if you see, there's a days highs in this part and this is the same liquidity zones. So what we can do is, instead of marking new rectangle, just drag this one. See, if you see, we have covered in the same rectangle the days high here, and same for this days lows and this days lows are same. So what does it mean? It means that everyday market reacts to the liquidity zones. It comes to the exact liquidity point and then take a sharp turn. So marking the liquidity zone is very important in the market. So let's go for the next one. So here the days highs, this one, this point, will mark it, click here, and then if you want to drag it further, see, if you see here, these are the almost the same. So we can take an average and drag a little bit here and drag a little bit here and join these two. So if you see, the liquidity zones are almost same for these two. Now we'll go to the next and we'll mark the days low here. Go to the end point and then drag it till the next day, and we'll go to the days high here. We'll take an average of the weeks. This will cover all the days high. Okay, so we see that all the liquidity zones are marked till the next day, and we have covered all the last 5 days. So now change the time frame to 5 minutes. Once we come here, so for the next day we can see where the market will open, and where if it opens here somewhere in the middle, if it opens here, we can clearly see where are the liquidity zones for the next day. So we can plan our trade in that way, and these are the points where the market will come and take a sharp turn, either upward or downward. So it is easy for the new traders or the beginners to know where the liquidity zones of the market are, which will help you in immense for your trading.